All right, traders, welcome to today's recap. It is Tuesday, February 1st, first day of the trading month. Congratulations, you made it to February after a pretty volatile January. So here we go. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. The video is for education purposes only. So yes, I do think that was, what helped the performance a bit today, right? So, these are all things that we've talked about the last couple of days, end of month type of rebalancing into equities. And I think there was some first of the month flows. Plus, you got some really good earnings reports after the close, and Google announces that they split their stock, 20 for 1 for 20. So that should really, in my opinion, make the stock a little bit easier to trade. Hopefully the options might be a little bit better too, but we'll see how that goes. I think Google just in general is a tough name to trade options, especially if you're trying to do call spreads or something like that. But the split might help liquidity a little bit. Let's hope. But still, I think it's really good news. Google going up to that second VPOC up here, and then AMD. I think I thought those were the two reports that I thought were most important for the day. And AMD does not have good earnings history, so that's what makes it even more impressive to me, because if you look at the earnings, the past earnings reports, I think out of the last 10 reports, they've only gone up 3 times, right? So they're kind of bucking the trend a little bit, and perhaps the recent move down in stock price also helping a little bit. Here's Google, what they normally do. So I think that AMD takes out this VPOC here at 131 if I had to guess. And of course, you're going to get some pin action, right, from some of these names. Nvidia moving up. We did see some positioning in Nvidia calls, but we see Nvidia calls bought almost every single day. On the downside, or on the flip side, PayPal. What can you say about this, right? They stink. For their quarter really stunk. And I think it was even a low bar to jump over, but they missed. And they mentioned a couple things in here. Weaker than expected outlooks drags down, and all that's also bringing down Square. So those two companies, Square and PayPal, which were darlings of the payment space, not so much anymore. And I think they passed the baton back to Visa and MasterCard, which have been behaving really well. I don't know if those names are being affected at all, but you look at both MasterCard and Visa, and the charts look. I mean, this is the weekly chart, and looks very good to me. I had a position going into today. I took profits in it. Visa, the reason why I traded MasterCard over Visa was because it's above value for the year, and Visa still has to get through that, which is 235. So I always go to the one that has the path of least resistance, and then also old school American Express, right? This actually looks like a really good chart, and it's a cheap company, which the market seems to really has liked over the last couple months, since they started to talk about raising interest rates. So I'm actually looking at putting this on as a swing trade. I did not put it on today. I'm looking at a weekly chart, which we only have 2 days of activity. We don't have the whole week of activity. But if you wanted to start a preemptive position, what I would do is use this, which we talked about this today in the trading room. Somebody asked me this specifically. I would start a position, and then you could watch this as the week develops to see if it gets over that value area for the year. But then if it does, I think you got something that's a little bit different here. And again, these stocks are, AXP, you could look at the price history. It's not going to move quite as fast as a high growth name, but still, if it could be a nice name to hold for a bit, because you also have the other side of this, which is kind of the reopening type trade, right? People booking travel and so on and so forth. Might as well talk about that. I've been looking at this Expedia a couple times in here. I think I tried it about a week or 2 weeks ago. Didn't work very well, but perhaps Expedia might finally break out here, because that's also been going sideways, and choppy back and forth type trading. But again, I'm on the side of the reopening type trades rather than the stay at home trades. That's where I'm, looking for some opportunities. I think Live Nation looks pretty interesting too. But again, growth stocks are just a little bit harder right now. All right. So talked about Google. I think that's great. Besides that, for the day, the star performers again are energy names. So we'll talk a minute about that. I wanted to mention too that the VIX, huge drop today, right? I mean, it's pretty, the VIX actually closed below 22. So, I mean, that's pretty amazing considering where we were just like a week ago, right? We topped out at like, what, almost 40, we got to 38, and look at this, right? So the VIX just coming down hard and is starting to look like obviously a bigger spike than what we've seen over the past months, but still the same type of pattern, right? Where you get this big episode of volatility and then a move down, right? It is not looking like this anymore. Credit spreads never look like this. We might as well take a look at those too, because I do like to see what credit spreads are up to, because they have been moving higher the last couple of days. So I did not take a peek at this earlier, but yeah, you could see this is starting to move down. So I have said, all along, I said, hey, they're important to watch, but I didn't think that there was anything really material going on here, even though we started to see a move up from the lows. For me, we at least had to get over this peak that we saw back towards the end of November, and we're not there. So could be another lower high for credit spreads. All right. So does this mean, and I'm going to go over a couple other areas, but, does this mean that you want to like jump back into everything in here? My opinion is, stay selective, right? We are now in perhaps a rising interest rate environment, and that changes things a little bit, right? And I think, I certainly, revisited that in January, that you do have to be super disciplined in your trading and you can't relax your risk controls. So I think that's the way to kind of always be, but I think specifically, even more so right now, to just continue to trade very, very disciplined. You still kind of have to make sure that you're sizing your trades appropriately so that you can withstand some bumps, right? And that you don't get shaken out every time you see a 5-minute red bar. We were talking a little bit about that in your trading room, in the trading room today. So position size is so important, right? To be able to kind of withstand, right, an occasional sell program, that's going to hit the market, because I don't think that's going to go away or anything like that. So again, position size, number of positions, really, important. Let's talk about energy for a minute. I mean, this is impressive. I actually tried to, what can I do but laugh a little bit? I was positioning in the dip last week in this Chevron after earnings, and I just didn't really want to hold a swing trade or start a new position unless I was able to take a target, which I wasn't able to do on Friday. But this is resolving higher. Exxon, big day. I don't know. I think this kind of got lost a little bit today, but look at this move in Exxon today, right? So that's certainly hoping this group, even OIH, which Exxon, Chevron are not in this ETF. This is more Halliburton and Schlumberger, right? This is strong, right? The ETF, the two ETFs that I'm in, right, is FCG, and this is in my trading account. This is the Nat Gas ETF. It's not. It's still companies, but more Nat Gas type companies versus oil and gas, right? So if you wanted to express that view, there's Conoco in here, there's PXD, there's Devon Energy, there's Marathon, APA is in here. Somebody asked me, because I only when I put this out on Twitter, AR is in here, but it's only a 3% weight. But you could see this is a pretty diverse. Well, obviously it's in one area of the market, but it's there is no one company that's like 15 or 20% of the ETF. All right. And then also there's another way that I've been expressing kind of the commodity type theme right now, and that's Gunner. This is a tough name, this ETF. Morningstar, it's the upstream ETF. If you're not really familiar with an upstream ETF is, you take a look at the components. As always, whenever you're analyzing an ETF, you should always be looking at the components. So yes, Exxon, Chevron are the two top weights in this. Just like they are in the XLE ETF, but they're a little bit less concentrated, right? 5%, 4%, right? Here's XLE in case you're not familiar with this concept. But Exxon and Chevron are 43% of the XLE ETF. So you're getting a really big chunk. If you want something a little bit more diverse, right? And not only in energy, but also has some materials in here. You've got BHP in here, you've got some ags, which ADM, NTR, Rio's in here. So you got some steel, you got some agriculture exposure, you got some mining in here, FCX. So that's actually one of the biggest weights that I have in the TTG trend portfolio, which is this Gunner ETF. Again, it's a little bit of a slower mover, but you got to kind of respect this. This looks like a pretty decent looking cup and handle type pattern, right? Here's your handle. So, you know, it's one of my favorite ETFs right now, to kind of get some exposure to this area, right? There's not a lot of great commodity ETFs that are like all the commodities, right? And I'm not referring to like, you know, ones that have copper and soybeans, right? I'm talking about the ones that have the companies. So this is the one ETF that I like for that. Yeah, and sticking with the agriculture names, you know, CF had a nice day today. I've been in and out of this name the last few weeks. I got back in it today. We did take out this 1 hour VPOC, and I like the fact that we're staying above it. So virgin point of control taken out here, right at 73.40. We're above it. But again, if you go across and you look at this group, there's some nice strength in this, right? So here's BG, ADM just crushed it on earnings. You know, the price action after earnings. Archer Daniels Midland, right? That's right now the star performer. Another one is Nutrien, right? That looks pretty good out of this group, right? So yeah, that's really where I see the strength right now in the market, or the relative strength. Also, let's just talk about the banks just for a quick minute. TD, I've been watching these Canadian banks. I don't have a position in any of them, but TD looks good. And I think the TD looks the best to me, but BMO is close to getting there. Bank of Montreal. There's another one too, Royal Bank of Canada. Now, if you look at the difference between these and some of the US banks, you can make some comparisons, but you have to look at the right banks. Wells Fargo, which saw a lot of call activity today, looks pretty good. And remember, this is, you know, had good lead up to earnings, and then had a decent earnings reaction and just kind of fell apart with everything else. But you know, maybe, you know, not thinking about your reservations about some of these banks and the scandals that they've been in, but I think WFC looks pretty good. I also like this one out of Ohio, right? This is Key Corp. They usually call it Key Bank, right? This is also coming around, right? Found the 20-day moving average. You know, really didn't have much of that bad of a pullback, right? If considering, you know, the overall market. And then if you want to look at the whole regional banking ETF, a little bit weaker than a couple of those that we just went over, but still it's coming around. And if you look at the weekly bar, it's actually pretty decent. All right, one more value area, which is the whole value ETF. I would be watching for a move above 166.80. But this is, you know, we're starting to watch things, and I haven't even gone over the indices yet, but, you know, we're watching some things kind of retake their moving averages. The IWD, right, large cap value, is now above all those moving averages. It's above the 200, it's above the 50, it's above the 20, and it's above the 5, everyone that I've got on my charts. All right, I did not go over the price action in the indices, but yes, we're retaking back levels. Notice what happened, right? We talked about this a week or two ago. definitely last week, probably the week before. Remember that I said that the price had to get back above the 5-period moving average. Notice what's happened since that's taken place. So again, we're dealing with this market one day at a time, obviously. But notice that Monday this started to slope higher, right? And price action got above this on Friday, right? And look at the follow through, right? So now, like the other way, if you're concerned that this is going to run out of steam, you could use various different levels, right? There's various things that will tell you, like, hey, that we might be kind of moving back in, but I would watch the 5-period moving average again, right? Keep it simple in your analysis, or use the 20-day moving average at this point, right? It depends on your level of risk. If you want more tolerance, use the 5-period moving average, or even use the 200-day moving average, right? That is probably the simplest out of all of them. Right. And if we stay above the 200-day moving average, right, then we've recaptured the uptrend. I would like to see us, of course, get back above the 50 too, but that's going to take a little bit more time. And if you've been, adding risk in here, the 50-day moving average might be a place to trim. And I borrowed this from someone. I believe it was. I'd like to, when I quote somebody on Twitter, I always want to make sure that I'm doing it properly, but I believe it was David Ryan. I think he won the US investing championship a couple times back in the 1980s. Again, if I'm messing up any of that information, I apologize. I'm just trying to give credit where credit is due, but I like this idea, right? Of saying, hey, if you're looking for places to kind of reduce your risk, if you've loaded up a little bit, or if you added, you don't have to load up, but if you added risk, maybe the 50-day moving average might be that, right? He mentioned too, which I agree, which was the NASDAQ getting back to the 200-day moving average, or the Qs, right? So I'm looking at the NASDAQ 100 futures. The Qs are right at the 200-day moving average. Maybe that's a spot for you to trim. It could be, or if we get above there tomorrow, considering the Google and the AMD results, and I would assume that this is trading up here a bit. Where are we at? 383, yeah, 368. So that will clear the 200-day moving average. Then you could use the 200-day moving average as your fail point to say, okay, the market's slipping back below there, right? The reason why we go over these levels and why I use the value areas and the moving averages is because the more that I could use that makes me not have to use your personal judgment, or when the day, when things are whipping around, using emotion, right? If you can set up where you've got your buy points or reducing risk points, your targets, your stops, all of this. If you could do this before you get involved in the market, you're in such a better place, right? Because you're planning it out, right? Everybody always wants to make predictions, right? That's fine. You can make your predictions as long as you have, a level that you're watching, so that if that prediction doesn't come true, you know how to handle it, right? We always have ideas, right? Some ideas are going to work, some are not. And the technicals provide us with some clarity around that. IWM still continues to be the worst of the worst. It had a good day today, right? And it's kind of seeing that reversion to the mean. 208 could be a level to get to. I did provide some of these levels too in terms of the 1-hour VPOCs. So I mentioned, sorry, I'm jumping around here a little bit, but try to stay with me. But 371 is a level that I mentioned pre-market today that could also be a place if you wanted to reduce some risk in the Qs. And there's one here in the S&P, which we're getting very close to. So we'll see how price kind of reacts in here. Looks like it's just about to be able to be taken out. So again, looking at the indices is important. We'll see how these things react, and we'll go from there. Did I want to mention anything else? Here's my trades. I knew that, I didn't know, but I kind of figured that today would be more of a first day of the month type move where we should see some money being put to work, but I wasn't sure what we were going to get, if we were going to get follow through after today. A couple things that just one other thing too that I wanted to point out too was the nice price action in the steel names. Unfortunately, I did not keep this trade from yesterday. It was just going to be a day trade, but nice move up here in the steel names today too. STLD saw some calls right out of the gate, right? This is a name that I would pay attention to. Right. Still has to get back above the 200-day moving average, but I view STLD as kind of best in breed. Nucor, also, this has been a tricky name sideways, so I don't think I would probably won't trade this one. But looking at things like ATKR, which had a really good earnings report too, this little bit of a sell-off today might be a buying opportunity, but I'm not sure yet. Right. Well, this one will be on the radar. All right. Just see if there's anything else that I wanted to go over here. Dow, I'm watching this chemical name. We talked about the banks, talked about the energy names. Oh, I forgot to go over this one. I started to mention it in yesterday's video and I actually forgot. Yeah, I think this Chinese internet ETF is again, it's in a downtrend. I'm not a big fan of downtrends. But I am a fan of the weekly chart, right? We're holding on to this 35.60 support. The other thing that I wanted to mention too is that this made a new low, but the RSI did not, right? So using this indicator, this study, that's known as a bullish divergence, right? When the price action makes a new low, but the RSI does not. So let's see if this can kind of build off of this. It has been making a little bit of some base, maybe a double bottom here. Right. So again, another area to watch. So again, the theme today, and this is where I'll leave it, was I thought it was good to see more participation. I want, if I had to choose, I want a market that has, several areas of it to kind of look at, not just a couple different growth stocks, right? I would rather have it be a little bit of growth and a little bit of value, right? And some rotation amongst them from time to time when things get, overbought per group. All right, guys, thanks for watching. Have a great night. See you tomorrow.